Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to speak with small cap executives after they put out important news. With us today, happy to have him for the first time ever, George Scorsis, CEO, Executive Chair at WeedMD, trades in the venture out of the stock symbol WMD. For our friends in the US, WDDM, and for our friends in Europe on Frankfurt under 4WE. For those who are new to the story, and that's going to be a lot of you because this is our first time we're covering them, WeedMD is a federally licensed producer and distributor of medical direct-to-patient and Canadian adult use cannabis. Supporting all that is one of the nation's top 5 largest cultivation platforms. So when you put it all together, they've got a world-class vertically integrated platform. A little bit of info on the medical cannabis side, they're a market leader. Their Starseed medical brand has exclusive access to about 350,000 patients. That's thanks to an exclusive partnership with Leuna, the largest construction union in Canada. On the consumer side, their two brands are award-winning. That's Color Cannabis and Saturday Cannabis, often one of the most searched for brands on OCS.ca. And all of that has turned into financial success because they just put out their financials. $29 million in revenue for the full year into 2020, up 41%. And Q1 revenue came in at $12 million, up 72% sequentially, 40% year over year. So they're hitting it out of the park. George, welcome to the show.
Hey, George, thanks for having me. It's a pleasure to be here. And thanks for imparting your energy on me. I'm excited to be here.
Well, it's exciting when you got a company in the cannabis space that's vertically integrated and actually, succeeding. So let's talk about that. Before we get into the numbers, the specifics of it, how happy are you as a CEO with what you guys were able to record for the year and for Q1, generally speaking?
Yeah, I think last year was reflective of a year of transition. Ultimately, I think that, when you take a look at what our revenue was last year and you mirror it to just even our first quarter, you can see the trajectory that we're on. Last year, we took a lot of steps for optimization, efficiency, automation, getting our SG&A under control and refining it. And this year, we started January really hot and coming in with all the pieces in place and the foundation in place. And you saw that we released 12 million. When we look at our peer group, we excelled far past what our peer group would do in the microcap space. And we were quite happy with it. And we're on an even stronger trajectory for Q2.
All right, because that's a question I wanted to ask you. Was that $12 million for Q1 an outlier? Because that puts you on a $48 million run rate. But it sounds like you guys are expecting to do even better in the second quarter.
Yeah, George, when you have the foundation, the processes, the systems, you get in the zone. It becomes more of a rhythm. And Q1 was an outlier. It's not a fluke. It's actually, you'll see a consistent quarter over quarter growth basis coming from what we've done. You don't build brands overnight, you don't build quality overnight, and you don't build distribution overnight. But when they all hit together, that's when you start generating proper revenue and top line. What you need to do ultimately is also have cost containment. And all of that has really fallen into place in Q1. And with confidence, we're going to do it again in Q2.
So fair to say that you guys now hit that inflection point, because I'm glad you brought that up. It's not just revenue top line. There are many reasons why a top line can grow, and not always for the healthiest reasons, right? You could be exchanging 4 quarters for $1. Clearly you guys aren't doing that. But at the same time, your kilograms harvested up 88% to just under 34,000 kilos. I love this, the weighted average cost per gram decreased by 42%. So hitting on all cylinders, is this, you've left the past behind and now you're at an inflection point where you're on a completely different path?
It's not about growing at all cost. And I don't just mean growing and cultivating. I mean growing your entire enterprise.
Right.
It's about growing with discipline. And if I can leave one remark to everyone, it's what we've done really well. Everything we do, every cost in this organization is really, it's evaluated properly. It's made sure that it brings accretive value to the business and that it's just not a lost dollar. It ultimately becomes to us is, every dollar that we put in needs to be several dollars put out. And because, look, we're responsible to the entire marketplace. The marketplace isn't what it used to be. You can't fool the marketplace anymore. and you can't fool the shareholder. And it's not about putting out big headlines anymore. It's not about, the press releases. It's about results. And we've done a lot of things that, probably weren't that appealing to many people from a press release standpoint, but from a business standpoint, they made complete sense. We've cut SG&A down significantly. We're not doing our outdoor, where a lot of people continue to pursue an outdoor grow, and really the market's calling for less biomass but more quality. We're hyper focused on medical, where a lot of people have abandoned that place, and that's really a unique selling proposition for us. So for us, we're doing things that make the right business sense, and ultimately the results will show.
So let's talk about that, because you've got the medical side, which seems to be the strongest side of the company, but I want you to talk about that. And then we've got the consumer brands, the adult use. For people who are new, you don't need to go into some deep dive dissertation, but help people understand why you guys are so strong on medical. Let's talk about that first. Because a lot of people, George's Cannabis can claim to be in medical at the end of the day, but you better have some real pillars, and you guys have those pillars. What makes you guys so strong on the medical side?
Yeah, so what's unique about ours is that the LiUNA portfolio, or the LiUNA labor union, is actually exclusive to us, and we provide them with medical cannabis. The ethos of what we did and why we started this was, obviously there was a growing opiate crisis, and I don't think too many people can actually not acknowledge that laborers' day-to-day work is extremely strenuous. And what we wanted to do is mitigate, obviously, opiate use by giving them a safe alternative.
Right.
So we do have an exclusive with LiUNA, and we have over 300,000 lives as the potential environment that we can service. What we do is we provide them medical cannabis, but we also provide them from front end to back end services, everything from making sure that they see the right physician to making sure that they get the right cannabis format for them to assist them, because it's not just about combustibles and flower. They may want topicals, and we offer all of that. So what makes it real unique to us is it's all covered by their insurance provider. So it's extremely unique. If you look at the medical space in Canada, it continued to decrease, and the average spend was anywhere between $700 to $900. Most of these individuals have anywhere between $2,000 to $2,500 annualized coverage. So the value of that patient is 3-4 times what the average medical patient is. In addition to that, it's a captive audience. They exclusively work with us. The other thing that's unique about us is our medical platform has grown. If you saw it last year and you took a look at our medical platform, we only had about 6 or 7 SKUs on our website. Now we have 35. So we have everything from flower to vaporizers to transdermal patches soon, to offer those that do not want combustible devices. So it's a larger array of what we have, but it's a real unique platform on how we work with these individuals from front to end and give them that white glove service, but also how it's paid insured.
And lastly, on LiUNA, if I'm not mistaken, they give you growth also in the US, correct? Because they've got another 2 million or so members down the US that could one day follow the same path?
Yeah, that's right. So that's the intriguing thing about it. So when you expand internationally, you don't just expand and you go with a CapEx heavy model. It just doesn't work anymore. You don't go start building facilities. You need to have something unique and in order to go to these other markets. So for us to go to other markets, we have a medical platform that makes sense. So if you look at most of the international markets, and I'll touch on the US in a second, both UK and Germany, which are pretty prominent markets globally, they're both medical. So think about this. We can adapt our platform and move into both of those. But in the US, we already have a base. We have over 2 million people, 2 million lives that are actually part of the LiUNA family. And when the regulations do change, it's about us taking our platform and just moving it to the south. So discussions are already taking place, and it's something we're excited by.
Also, despite the fact that medical is legal in a lot of states in the US, you can't quite take the platform down there yet because you need some kind of federal legislation to sign off on?
Yeah, that's right. So we do need federal legislation to pass for a couple of reasons. One is obviously our TSX listing would put us in it would put us offside with the TSX. But secondly, we do want to be compliant with our partners, and our partners do work with the federal government. So we do want to wait until that legislative matter moves over.
Well, the great thing is you've got more than enough business to get done in the meantime. Sounds like you're just waiting for that to get going. So let's talk about, and if you can, let's talk a little bit about the consumer use, the adult use side. You're hitting it out of the park there too. You've got award-winning brands, and you've now got the product in over 1,100 locations, correct?
Yeah, so 1,100 locations that we have versus 225 last year at this time. So our growth is pretty expansive, 350% increase. And, you know, to win in adult use, it's about brand development, it's about distribution, but it's the most important thing is quality of product. And I think on all of those metrics, we continue to grow.
So let's talk about your balance sheet finally, because you're going to grow. You've got to have the financial resource to do it. And 2 years ago, 3 years ago, that wouldn't have been a problem. Anybody with a PowerPoint deck was getting money thrown at them. But now the market is finally starting to pick the winners and the losers, and they're letting the losers die. It seems like the market has said yes for WeedMD because you closed some pretty strategic financings.
Yeah, so we closed the bought deal for $17.5 million to bolster our cash balance. We were already sitting on a strong cash balance before that, but we took an opportunity with the upswing in the marketplace, and it was the right thing for us to do to have enough, gunpowder for the future if we needed it, in terms of potentially working with strategic acquisitions or ultimately to build our platform. Neither right now are necessary. We are in a mode that we're being disciplined. Like I said, it's about cash containment right now and not burning and working in discipline. So we do have a good cash position within the organization. Again, we also have a very strong key shareholder. Our key shareholder has over a $7 billion fund under assets. So that's a strong lead shareholder that we have. So our cash position is one of our strong points of our organization. There's no need for us to raise capital right now in the market to create further dilution or to do it at, within a market of volatility. That's one of our strong points in the company.
How do you see the market for, look, well, a big part of this is you're not just a business, you're a stock, and we're not going to talk about stock price projections or anything like that, but how do you see the market? Because you're an industry stalwart. One thing a lot of people may not know is you've had really great successful exits where you've started from the ground floor and had some great exits. So you really have great vision on all this. How do you think the market starts to treat cannabis stocks? It seems like we went to that lull, then we had a bit of a really fast start, and then a correction again. Where do you see the market going from here in general? How does it start separating winners from losers? What are the metrics?
Yeah, let's be honest. Losers are going to self-select out of the market. It's like evolution, and I hate to sound so harsh, but capital is not so easy to come about for many of these groups that just have been burning capital year over year. And unfortunately, we're going to continue to see this trend in the case that we continue to see insolvencies of what I would call the small cap or the mid cap. Outside of the canopies, the Chronos, the Ephrias that are heavily cashed up, I would say that most of the other licensed producers in this space, if they don't run a good playbook on how to be profitable, then they're going to run out of cash. So I call it self-selection. But I think outside of that, I think what you're going to see is most of the peer group that we're sitting in, they're actually either falling off or there's a lot of consolidation in the space.
And I was just about to ask you that. Does that create opportunity for you because you are strong, you are stable, and do you think that would create opportunity for you to be able to pick off some great assets and pennies on the dollar, or maybe even entire companies?
Yeah, so that's exactly what we're looking for. And for us, we have two really good platforms. We have medical and we have both our adult use. And we're not desperate to make any transactions, but we're constantly watching for the right opportunistic transactions for our business and our shareholders. And I can tell you, Cantex, for instance, that we announced just yesterday was a great opportunity. You know, we want to put aspects of our business in that are accretive. We don't want to buy businesses because they have 1 million square feet. We already have enough square footage of cannabis to grow. It's about really offering the consumer something different and addressing their needs. And when we see those opportunities, we are going to be opportunistic. So consolidation is going to happen. Look, you saw it with 48 North. You saw it with a few other ones in our peer group over the last few weeks. And so you're going to see consolidation, and consolidation is necessary, especially when your cash position is deteriorating quickly. We're not in that position. We would rather be in a position of acquisition versus being acquired.
And I want to talk about that Cantex just a little bit, because since you brought it up, and you're so right about how you guys are positioned. It's clear as day to me. But what I like in the press release, there's a quote that says the Cantex team is nationally regarded as one of the premier leaders in genetics validation, more recently for its craft cultivation and solventless full spectrum products under their brand. Clearly, they're a great company. Is this an example of how you guys were able to get a more fair deal without, as opposed to 2-3 years ago, a company like this might have been going at crazy valuation? Here's an example of where you're able to, pick up a company for a fair price.
Yeah, and I would say a fair price is the right term.
Right.
When we looked at this, George, we saw a couple things. What do we need as a company, as an organization, ultimately, to be successful moving downstream? We knew that we had a great medical platform. We know we have a great adult use platform, but how are we going to continue to win on both? So when you take a look at this aspect of the business, Cantex has one of the best tissue culture programs that I've ever seen in my entire life. So that helps us from both our adult use and our medical, because it will enhance the quality of our product. They also are designated as a craft grower. So think about this for a second. I always use this parallel. Think about, for many of the viewers who live within Ontario, when you walk into a liquor store, there's always a vintages or a vintages section. Within that vintages section, it is very selective in who makes it. You need to be qualified to be within that vintages. They have craft designation. So what that allows us to do is, rather than everyone else who's fighting for what I call the value brands, we don't want to fight at that because it's a compressed margin marketplace. We want to move up into the premium and craft category. So this also allows us now with our Saturday to be at par, what I call a 100 index, then with color, slightly higher index, and then we go into the premium category in the craft. So it allows us to play in more categories. The third piece is, we do not have the capabilities today to do solventless extraction. We do CO2. Again, another...
For people at home, what's the importance of solventless extraction? Because 99% of us, including me, don't understand the distinction, but clearly it's important.
Yeah, no, it is clearly important, because it's actually the derivatives that you can make is the easiest way to do it. CO2 and
yes.
Solventless is just two different formats, but solventless allows us to get into what I would call other concentrate markets that are growing quickly, such as the hash market. So we'll be able to produce premium hash by acquiring them. So it allows us to be in more segments with higher quality, higher margin products, but also the core of their business, the tissue culture and genetic aspect, is going to help both our adult use and our medical platform.
You're expecting that deal to close. It said mid-year, if I recall from reading the press release, and we're almost at mid-year now. We're June 1st. So you're expecting this is going to be a pretty tight close. You'll have it done by the end of the year, by the end of June?
Yeah, I'm suspecting that we're going to get this deal closed fairly quickly. We've been working on this for quite some time. We've got to keep in mind, we've been working with this group for over a year. So there isn't, we both know each other. We know the cultures of the organization. We know our ways of working. We know our SOPs. These are all the things that get in the way sometimes of transactions. And we've had a friendly relationship with them for over a year.
George, you guys are hitting on all cylinders. And if we could take an hour easily to keep diving into WeedMD. But I think this is a great place to kind of stop this one here, because it's clearly showing you're at an inflection point now. It's clearly showing you've broken through. And then we'll do a deeper dive as, I guess, the Cantex acquisition closes and other things start coming, because it sounds like a lot's happening. So I'm going to leave last word to you. What do you want to say to your shareholders who have been loyal, but at the same time have had to suffer through industry issues, even some WeedMD issues, right? But you guys have picked yourself up, and now you're really. What's the last word from you to all of them?
I think the reason why you invested in this company is the exact reason why we're going to be successful. It was a vision, and now that vision has been turned into proper execution, and we're executing for once. And I got to tell you, we're executing now. Q1 was a glimpse at 12 million. Q2 will also be a further representation of what this company is capable of. And then you're going to continue to see that. This is a company that is now set up for success in so many different ways. And the future is promising. And, I want to thank all the shareholders. They've been very, very supportive. And I look forward to showing them the success of the future.
Thanks, George. Thanks for being here, taking out the time, because you're running a great enterprise here. So it means a lot to everybody at home. And congratulations to you and the team for a great 2020 result, and even better Q1 result that made my eyes pop when I look at it. And looking forward to having you back next time.
Thanks, George.
To everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To George Scorsis, CEO and Executive Chair over at WeedMD, trades on the venture exchange on the stock symbol WMD. For our friends in the US, under WDDM, and for our friends in Europe on Frankfurt under 4WE. Your part now, you got to do your due diligence. Step one, get to the WeedMD profile in Agoracom, because there's a lot of moving parts in WeedMD, which is great, but we give you a great 10,000 foot overview so you can really understand the company and what it's doing. And then to do your deeper dive, you can see the URL right above George, WeedMD.com. Get over to their site, do a deeper dive. Our thesis at Agoracom is that cannabis is going to continue. The cannabis market is going to continue to grow this decade. And the numbers have shown that it's going to be the global legal cannabis market is going to be $84 billion by 2028. Well, you got to decide by doing your due diligence if WeedMD is going to be a part of that, or how big of a part of that there's going to be. We can't do that for you. You got to do it. Just don't say 12 months from now, we didn't tell you so about WeedMD. Have a great day. See you next time.